Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Reality radio for a really great future. We're talking real money.
Hi, welcome to Talking Real Money. I'm Don McDonald, actually on my phone because, well, we had a little technical problem. You know, when you're trying to connect from clear across the country or even just across town, for some reason, things went awry. My little tie line unit didn't do what it was supposed to do, and so now I'm doing the show through my phone. We couldn't get it to connect to Tom either, so just all kinds of little technical things that I want to apologize for, and thanks for tuning in to Talking Real Money. And remember, you can give us a call. Well, me right now, it's just Don at 855-935-TALK, 855-935-8255. If you have any questions or concerns about money and how you can make more of it, spend it, save it, invest it, protect it, deal with it in all kinds of different ways. And we, of course, have lots of lines open for you. 855-935-TALK, 855-935-8255. Had an interesting news story this week that Tom and I wanted to spend some time talking about here at the beginning of the show. It kind of fits in with a lot of other things that have been going on with the markets, and it has to do with the initial public offering of a little online company called Robinhood. I actually think it's misnamed as Robinhood because Robinhood was supposed to do good things for poor people, and this current version of Robinhood, I don't think it does good things for smaller investors. I think it's bad for smaller investors. I think it's a negative for smaller investors. And even though a lot of people have made a lot of money recently, that's not necessarily something that's going to continue into the future. But that's not the reason I want to talk about the IPO, the initial public offering. Because here's the thing about this initial public offering and many, many other initial public offerings, and that is the fact that, one, you're making, just like you were when you were buying GameStop on Robinhood, when you're buying shares of Robinhood, you're making a bet. You are literally gambling. And it's not gambling that's necessarily good for you. As a matter of fact, most gambling isn't good for you. But in these cases, you don't get a heck of a lot out of it. Most IPOs go down. As a matter of fact, there was a great piece in the Wall Street Journal comparing the Robinhood IPO to a Merrill Lynch IPO back in the 70s that did nothing but just go down. And that's exactly what the Robinhood IPO has done recently. We want to try to discourage you from doing things like this because it isn't investing. Despite the fact that the Wall Street Journal calls it investing, it really isn't. And you need to be really, really careful. Don't get involved in any individual stock if you can help it. It's better to diversify. But when it comes to the excitement of these initial public offerings, and there are others we can talk about too. Nikola, whatever, didn't do particularly well. A lot of these can be real problems. We'll be right back.
Tom and Don are talking real money.
Set your course for a great future with a free copy of our 60-page Better Retirement Guidebook at vestory.com, vestory.com.
Talking Real Money. It's a different tune. Well, it's the same tune, just a different version, I think. Hi, I'm Don. I think it's working. I think everything's working. I've hooked up. I'm on my mic.
instead of on my phone. It sounds better at this end. Oh, that was the beginning. Or was that the ending? I don't know. We just call this one of those days when bad things happen to good talk shows. Or, depending on your perspective, the day when bad things happen to bad talk shows. Hi, I'm Don McDonald. We're having a little bit of a problem getting Tom connected, and so you got me for a little while. 855-935-TALK is our phone number. That's 855-935-8255. Give us a call. We'll try to make money a little bit easier to deal with, try to help you avoid getting ripped off, try to make sense out of the frustratingly confusing world of high finance and low finance and everything in between finance, and try to help you avoid doing dumb things, getting ripped off. There are a lot of people out there who want to take advantage of your naivete, so call us and we'll try to help you eliminate some of that. One of the things that we tend to enjoy is when you leave reviews for our podcast, which, by the way, this turns into a podcast. This show every Monday and Tuesday goes up online as a podcast. And we love the reviews, nice reviews like, here's one. Let's see. Let me get one of the more recent ones. Let's, real quick. I listen daily, highly recommend regardless of age. Now, that is in reference to a review that went up the same day. And I want to read you this review. It says so much about our world right now. It really does. Quote, I started listening to the podcast for a month or so and was enjoying it. Granted, the calls were just rich older people asking what to do with $200,000, but that's beside the point. Rich older people. This is what a younger person thinks of you. If you have $200,000, you're a rich older person. Now, you know as well as I do, $200,000 doesn't make you rich going into retirement, but we'll get to that later. I continue. I was excited to hear their take on Bitcoin, but was disappointed. Not because they didn't like it. Fine, I'm sure they have their reasons. But they dismiss it so hard with just interviews of others who do not like it. I was hoping to hear their clear, worked-out point of view, but alas, this podcast seems designed for an older generation that is wealthier, and all they say is, quote, Bitcoin bad, and don't really consider anything happening in any place other than America. Signed, Marks 951. Okay. I just wanted to read this because I would like to, I kind of want to get your take, particularly if you're under 40, maybe even 30. There's a couple of things I just want to address here because we actually do talk about the reasons. This is not just a knee-jerk reaction. We hate Bitcoin because young people like it. That makes no sense. If there was something that was a great new investment vehicle and it had proven itself to make a great deal of sense, like exchange-traded funds have now, we'd be all over it. But cryptocurrency hasn't really proven it serves any purpose other than to provide a means by which people can speculate. That's not just from being old, although it helps to be older, because when you're older, you start to gain perspective. Something that, I hate to say it, I was young once, and I thought I had it, but I didn't. I thought way too much of my skill set and my knowledge. I was intelligent, but I wasn't knowledgeable. There's a difference. We do not dismiss Bitcoin out of hand. We dismiss cryptocurrencies in general because they don't have any, not a single useful purpose. They're not a proven, reasonable, albeit terrible investment, store of value like gold has been or real estate has tended to be. They are not. They don't, no one can spend them. You really can't. Don't tell me you can spend your Bitcoin, 'cause you can't. Yes, there's a limited supply and high demand, but that's Bitcoin. There's nothing to stop anyone from creating a cryptocurrency. And as for not considering anything happening in any place other than America, we're one of the few places, one of the few sources of financial advice and investing advice that insists that you invest outside of the United States. You can't just invest here. It's a huge mistake. And yet the vast majority, and we've seen this, the vast majority of investors, young or old in the United States, invest the bulk, if not all of their money in America. You gotta be diversified globally. So here's what I want to ask you. Those of you who have been listening for a little while to the show or the podcast, have we done the younger investors a disservice? And if so, how can we do better to educate younger investors? And the fact of the matter is we really, really want to know. Our goal is to help everybody. Because let me tell you, younger investors, if you think somebody with $200,000 is rich, you're going to be shocked when you get into your 50s. If you only have $200,000, you're going to be shocked at how relatively bleak the future might look. Being rich in this world, particularly in this country anymore, takes millions of dollars, not even a million. $1 million will give you a pretty average low end of middle class life throughout retirement with some security. 200,000 isn't going to do much. That's not a rich number. So bear that in mind. If you're young, you are going to need to save a lot. You are going to need to invest a lot. You are going to need to build true wealth way beyond 200 grand or 500 grand or probably even $1 million. And that means the sooner you start, the better you're likely to be. And Bitcoin's not the way to do it.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Most everything's working better now than it was before. Hi, I'm Don. Welcome back to Talking Real Money. Our number, I'll give it to you again, 855-935-8255. 855-935-TALK. Give me a call. I think the phones are working. It's been one of those days. There was a problem with the phones earlier. And then with the internet, then with the tie line, and then with the whatever. It's just been one thing after another.
Don, just blame your board operator.
I'll blame my board operator. Hey, that's what you can do. Board operators have always taken the blame for everything throughout the history of radio. And since I've been here for most of the history of radio, or a decent chunk of it, probably longer than my board operator's been alive. But, that makes me old. You want to hear a nice review? Here, I'll give you a nice review. Here was one of the nice ones. I've been listening to the podcast for 1.5 years now. Tom and Don are great. Actually, they said it the other way, but I put Tom first so he could feel better. Not trying to sell you anything. They provide you with the knowledge for a great future. There's no better financial advice out there, apparently, for old people. But if you're old or young, give me a call. 855-935-TALK, 855-935-8255. And remember, that number works 24 hours a day, 7 days a week. And you also have the ability to send in questions via our website, which is talkingrealmoney.com. You can type them in or you can speak them in. And it's really easy. Just go do it. 855-935-TALK, 855-935-8255. And I'm going to do an online question right now. Hello, Don and Tom. I am 60 and retired on a pension. I have a 457. That's a nonprofit, a government type program with 40% equity, 60% cash and bonds. After listening to your show, I want to increase my equities. I have $30,000 in cash I would like to invest and add monthly until I start to withdraw years from now. I'm looking to split this in VT and VTI and investing it at Ally Bank. Your thoughts, suggestions, or criticisms would be appreciated. What? Really? You can invest, I guess it must be a brokerage account at Ally Bank. And that means you can buy the ETFs. I just want to make sure there's no cost for you doing that. But if it's a zero, they may have a basically no cost trading platform, because Ally Bank is an online bank, but I didn't know that. That's something I learned. As for splitting it between VT and VTI, why? Why not just VT? And the other question I would ask is, why do you want to get into more stocks? I want to make sure you're doing it for the right reason. If you're doing it just because you've heard us talk about stocks and how well they've done, please be careful. You're in retirement. You've got a 40-60 split, which is probably an appropriate split. But go to talkingrealmoney.com and take the risk quiz just to make sure. Make sure that it fits with your psychological profile, with your ability to take and handle the volatility that comes with taking risk. You see, it's not just about taking risk. Risk is really irrelevant when you're talking about the VT, the Total World Stock Index, which is pretty much everything. You need to make sure that was wrong music. That's not the music. You need to make sure that it's comfortable for what you're doing. Okay, go to talkingrealmoney.com, take the risk quiz, but just do VT to add stocks to your portfolio. Again, we don't believe in making it more complicated than it need be. 855-935-TALK, 855-935-8255 is our number. Give us a call. We'll talk about the money matters that matter most in your life, and I'd love to talk with you.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com, Vestory.com.
Reality radio for a really great future. We're talking real money.
All right, I'm gonna bring Tom in on FaceTime. Tom, turn the radio off. Where is he? Oh, fine, he's not there. I was just gonna bring him in on FaceTime. 855-935-TALK is our phone number. 855-935. I got to turn that down. No, you're not connected. I was just going to tell you, turn your radio off because it's about 17 seconds behind. So he's listening on the internet. All righty. There we go. 855-935-8255. Give us a call. or I'll take questions online. I can do it either way. I don't mind. Wait, did I hear something? Okay, I didn't hear anything. We're still trying to get him to connect here and just can't figure out why it's not working. We'll fiddle here. Yeah, I'm turning here. Go over here. You don't need your headphones.
Boy, I can do this.
What? You don't need. All you do is just talk. Say hi to everybody.
Hello, friends.
See, Tom's kind of here. He's sort of with us in spirit. Yeah. This is the spirit of Tom. The ghost of Tom past.
It feels a lot like that dance in ninth grade. I can see everything happening, but I'm not part of it. So.
Well, wait a minute. Wasn't that pretty much throughout your high school career? I'm a wallflower.
Let's not go with that degree of pain on a Saturday, if you don't mind.
I'm literally holding my iPad up to the microphone.
Yeah, he sounds like the disembodied voice.
Yeah, he is. He's a disembodied voice. It's the voice of Tom.
Well, Don, while we're working on that, I have a question, if you don't mind.
Oh, my gosh. This is weird. I'm getting like disembodied voices from everywhere.
From everywhere.
No, I do not mind.
Well, let's say I'm a guy who's 50 and maybe has roughly 200,000, in the 401k. What do I need to do to catch myself up?
Oh, well, you're not going to like the answer.
Rob Banks?
No, that would be bad. That really kind of goes against the whole honest approach we take here on Talking Real Money, doing it the old-fashioned way, not stealing, and not speculating, and not gambling. Do you have your 401k? Do you contribute to a Roth?
I do not.
Can you squeeze a little bit of money out of the paycheck? A little?
You mean that money I've been stashing in the freezer? Yeah, absolutely.
Yeah.
Freezer's
right,
not a good place for it, is it?
No, it's a really lousy place for it. I really believe in the power of a good Roth IRA. Because the nice thing about a Roth IRA is that it grows tax-free. And my guess is, since you work at a radio station, you're not exactly in a high tax bracket.
No, not at all. Not at all.
Yeah. So you really don't need as a matter of fact, do they have a Roth option for your 401k?
I'm not sure about that. I'll have to double check. And with things changing here soon, it's all going to change. I'm going to have.
Oh, that's true. There'll be a new 401k.
Well, that'll be the next question for the next block if we don't get some callers here pretty soon. But we'll get to that. Let me let you finish the answer to this one first.
The answer to this one is just with whatever you can eke out of the budget every month and find an amount and make it an absolute must-do ahead of every bill except paying for the house. Paying for the roof over your head. Make it an absolute, I must put 50 or 100 or 200, whatever you can afford a month, into a Roth IRA. Then get it invested because you're 50, you still have at least 15 years before, probably 16, 17 years before you retire. Invest it reasonably aggressively. Invest it in something like VT, the Vanguard Total World Stock Index, because that's how you catch up. And don't pay attention to what the stupid stock market does. I know you're in the news business, but don't pay any attention when there's a report about the stock market plunging.
I'm actually very good about that, Don.
Yeah. Okay. Then absolutely, but find even 25 a month, a little extra building up over the course of 10, 15, 20, 25, 30 years, some of it will probably go, can really make a difference.
Okay, let me squeeze in one quick follow-up. Is that something I can do pre-tax, or does it have to come out of the post-tax take-home?
Post-tax. You don't want to do it pre-tax anyway. You're not in a high enough bracket to make pre-tax matter.
Okay, that's fair.
As a matter of fact, with your 401k, if you have, with a new employer, if you have a new 401k that offers a Roth 401k, you want to start a Roth 401k so you have two pools. You have remember, your 401k is going to get taxed when you start taking money out in retirement. Roths don't. So you're going to want to have a little bit of both. Thanks for the question. Now, if you have one, give us a call, 855-935-TALK.
Tom and Don are talking real money.
Want a free copy of my book, Financial Physics? Well, go download it right now at vestory.com, vestory.com.
For your real life and real future, Tom and Don are talking real money.
Well, I'm back. Tom's not. During the break, though, we keep trying to get him back because we're persistent here at Talking Real Money. We persist in not only bringing you a show, but in bringing you the best advice and direction you're going to find anywhere. It may not be what you want, but, and this is directed to our young correspondent, we're not here to tell you what you want to hear. We're here to tell you what you need to hear. We refuse to pander to the latest hot stuff. We're just not going to do it. 855-935-TALK. That's our phone number. Everything's settled down. Patty, you're up. Welcome to Talking Real Money.
Oh, hi. I have a question about Social Security. As
yes, ma'am.
We're planning our future here. You know, my husband is 71 and I am 57. And we're just doing our long-term planning because he is going to retire next year. And he waited until he was 70 to take his Social Security. And I am wondering, with a 14-year age difference, what age should I take my Social Security?
Oh my gosh, it's going to depend really because here's the issue. Your husband being that much older than you, he is probably going to precede you by several years in death, correct? I mean, that's the odds.
Correct. Theoretically, yes.
Which means you get half of his Social Security at that juncture. So in your case, because of that vast age difference, wow, this is an interesting question. I'm almost leaning toward taking it earlier rather than later because you're going to have yours and his to live on as a couple. And then when he goes, you'll get half of his, which is probably going to be, well, how have you looked at your Social Security benefits? Have you gone online?
Yes. Mm-hmm.
And
yes.
what is your estimated benefit at 70?
At 70, it would be about $1,600 a month.
Got it. Okay, his is probably in the 3,000s, right?
Yeah, his is $3,900.
Okay, his is 4,000. So, and what was yours at 62?
What was mine at 62?
About 1,000?
Yes.
Let's see. So you'd be taking it from 62, and then when he goes, you would be. Oh, that's right. You're going to get all of his. You only get half. Oh, that's right. Okay. Wow. I got to tell you, take it early. I'm just trying to run a number of scenarios through my head. I would take it early because you're going to get all of his when he dies. So you're going to get 4,000 when he goes. And up to that point, you're going to be adding an extra 1,000 every month to the household. You can't get both. You only get one or the other.
Right. So if I take it early, I won't.
Yeah, I take
the reduction.
I take it.
The percentage reduction that would affect mine would not affect his.
No.
Okay.
No, because he's a separate entity than you. Yours doesn't. Okay. Now, are either of you going to be working at 62?
When I'm 62, no.
Okay, then unless I'm missing something, I hope somebody will let me know. I think it makes a lot more sense for you to take your $1,000 and, yeah, I got to tell you, that's what I'd do. I would absolutely do it. The more I think about it, the more I can't see any reason not to.
You know, I've read a number of articles on it, and they did suggest that. I just wasn't quite sure if I was missing something there.
No, I'm trying to think of what could be missing. I mean, and I can't come up with anything. I can't come up with a thing. I mean, you would get half of his. You would get half of his when you get to about 67 and change, instead of your 1,000. But there again, for you. That's still a decade away from now. Putting your husband at 81. I would just start taking it at 62, and then you're going to get his when he passes.
Okay. Well, thank you. Appreciate that.
Well, thank you for the call. I appreciate you stopping by. 855-935-8255 is our phone number. 855-935-TALK. See, Tom is chiming in. He's just chiming in writing. I'm going to say, thanks, Tom. See, there we go. All right. He's listening and chiming in. 855-935-8255, 855-935-TALK. Also, you can send questions in at talkingrealmoney.com. talkingrealmoney.com. And, in fact, I'm going to go to one of those. I already did that one. Okay, here we go. This is a good one. I have an investment in a medical research company that's been in successful trials, though not finished. They want to take the company public this year. I've been notified that the warrants I have are valued at $10.22 per share. They are going to be transferred to common. Excuse me. But if I pay $2 per share, somehow that makes it possible to convert them to stock. I have two smaller companies selling equipment that is more over the counter and is in portfolio. I can pay the price, but I don't want to throw good money if it doesn't seem reasonable. Is this enough information to be able to form an opinion? No. It really isn't. I need a lot more information and a lot of information on the companies. The nice thing about warrants is that, you can convert them and then immediately sell them at a profit. So I would, if there's a profit, then I would convert and sell. Otherwise, I don't know. I can't really tell you much right now. 855-935-TALK. Jordan, you're next. Welcome to Talking Real Money.
Hello.
Hey, Jordan. Hey, what's up?
Hi. So as I was explaining to the lady that answered the phone, I'm 41 years old. I've got no kind of savings, no kind of retirement plan. It's definitely time for me to start. I listen to your show enough to know that I'm probably screwed already.
No, you're not. You're 41. That's not as old as it feels. I know.
So my company does have a pretty generous 401k. I can contribute up to 15% with the 100% match.
Can you afford to do that?
Probably not. I could probably afford more like 10%.
Do it Monday. Go do it Monday, because and if you can squeeze an extra 1 or 2%, get it up to 11 or 12%. Do it, because you're leaving. It's like leaving $20 bills laying in the road. You have somebody who's willing to give you absolutely free money. You got to take it.
Tom and Don are talking real money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That's a wrap.